Hello. So today we are going to discuss a topic which is again a frequently asked questions from many people. And this question is, so generally this question is being asked in two portions. Is it the right time to enter into the market, or isn't it market very high and people should get out of the market? So every time when you are watching the market from the outside, it always looks very volatile, and you always keep on wondering whether you should invest into market when nifty is 12,000 rupees 12,000, or you should listen to TV advisors who are going to tell you that no, market is at 11,900 on way high, there might be a correction and then you can buy there. So similarly, people may also tell you even when Nifty comes down to 10,000 to wait for another 2,000 point. However, when market goes down again, a lot of people may tell you that okay, this is already a high and one should get out because you never know when exactly the market will go down. Well, apart from the valuation, apart from everything which is very intelligent and smart about investment banking or stock market, one bitter truth is everybody who is involved into this market, they have their own emotions also working for the market, towards the market. And that's why a lot of work is being happening also around behavioral finance, right? So in this I'm sure when many people have asked me this question, I'm sure you might be also wondering to find an answer for this question, that okay, now I'm learning about this stock market course. What is the right time now for me to go and start investing? I have covered few topics. Maybe I know the basics. I know how to open a Demat account, but can I start investing now when Nifty is 12,000? When I'm recording this video, this is 12th of December, and since we always update the latest video in this course, so on 12th of December, if you see that market is at 12,000, do we really need to go and invest now, wait for some correction? What exactly we need to do? Well, uh, to give to so I want to demonstrate you now something, now that I have given you the enough background of this topic. I'm going to show you the graph of Tata Consultancy Services. Okay, so let's say this is 3-month graph of Tata Consultancy Services. Look at the graph and then imagine, take a pause also here maybe, and imagine where would you would be investing. Will you be investing here? You will be investing here, 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 or where exactly? So you can see a lot of zigzag, lot of volatility. So you obviously look at 3-month graph and then you will see that yeah, it's difficult to decide where exactly you want to go and invest. You came here, stock prices came down, and when it was coming down, you never know where it will go. It might would have gone here as well, you know and then suddenly it started going up, and then again you thought, okay, it started going up, maybe I'll never get an opportunity to get into it, and you bought here, and then stock came here. So you can see that the volatility is making it very difficult for you when you look at 3-month graph, right? Okay, so again, I mean, some people may say that we need to go and learn technical analysis so that we can identify where exactly we have to enter. Well, that might hold true for traders for a short span of time. But what we are talking about, the topic is what is the right time to enter and exit from the stock market from an investor perspective. Right. So, as a technical trader, in later chapters, you will learn that in short term period, how exactly you have to trade. But we are talking about investment here in these generic topics, and there we have to answer these questions from an investor perspective, and we find it really difficult when we see a 3-month graph. Well, we all know about Tata Consultancy Services, Tata Group IT company. IT is one sector which has done really well in last 25-30 years in India. Okay, so we'll look at another graph now. So here we found it difficult, right? Okay, great. So now we will see at 1 year graph of TCS. Oh, it's looking more confusing, more zigzag even in 1 year. So what about the philosophy of, the investment done for a little longer period of 1 year might be okay with you? I don't see here, right? So long term is probably longer. So here in 1 year graph also in TCS, you cannot decide what could be the right way or what is to interpret from this graph in terms of developing a philosophy about when to enter into the market and when to exit out of the market. Great. Let's see another graph. Oh, this is a graph of from 2005 to 2019. Okay, it looks quite sorted. Now, looking at this, can we decide where exactly to enter or where exactly to exit? Well, I see that at any point of time, if I enter, I'm going to make a lot of money, right? Yes. So this is what I wanted to highlight you. Uh, in long run, there is always a time to enter and there is no time to exit if we talk about the stock market. However, we always have to take exit, from stocks. And what are those factors where we need to take exit is something which we will cover in the later part of this class. But let's start with one very basic philosophy. We are talking about the stock market, right? And as I told you, that timing the market is probably not a good idea. Nobody has been able to do it in terms of timing the market from an investment perspective, you know. So you do not have to time the market, you rather have to understand about the stock market in a detail. And when I talk about the stock market, most important thing here is, let's learn about the investment. Stock market is type of investment only, so let's learn about what are the other type of investment and how we actually have to go and place ourselves in which kind of investment. So if we are sorted on the investment side, you will be sorted on the equity stock side as well. Okay, stocks, equity, shares are interchangeably the same word. I would like to pick up one statement from Mr. Warren Buffett, who is called the god of investing. And I mean, everybody in investment community have a very great regard for him, and so am I. Have a very high regard for him, for both Warren Buffett and Peter Lynch. Honestly speaking, in later chapters, so people also keep on asking me, like what is the something they should read. So Peter Lynch is another, one of the greatest investor of all time, who was a fund manager with Fidelity. So I have very high regard for both of them. I should not compare, but I have equal regard for both of them, honestly speaking. The way Lynch has also given consistent return for other people through Fidelity as a fund house for retail investors is amazing. He was very consistent at a very high rate. Okay, so you can go and refer to 3 books of Peter Lynch also if you want to learn more about stock market. Great. So now I have picked up one statement from Warren Buffett, who is always saying that cash is a bad investment. So, what is cash? So, cash is the money which is lying in your account. Okay, maybe not the saving account, maybe not in the fixed deposit form, but something in the saving account or current account. Current account is where you don't get any interest. In India, at least in your saving account, banks keep on giving you 4%. But even that 4% is really a very very low return, right? So why cash is a bad investment? So if you take Indian scenario in consideration, and let's say you would have just kept money in cash form in your almirah, what would have happened to that? Okay, so first thing first, recently in our country we had demonetization. You know that that would have been a really bad idea and a nightmare for you if you would have kept all your earned money in form of cash. But okay, even if demonetization would have not happened and it's all your hard-earned money, you would have been able to convert it with the new notes. What would have happened? 10 years back, that 1 lakh rupee might be worth something, you know. But today, that 1 lakh rupee will probably be equal to 20, 30, 40,000 rupees and not more than that. What I'm trying to tell you is that money is losing its value every day. Something which you would have bought in 100 rupees 15 years back, you won't be able to buy the similar kind of value given stuff in today's day. So cash is anyway going to be a bad investment. It is not going to give you a good return for sure, right? So where exactly you can go and place this cash? Well, the other investment which you have is real estate, gold and FD. Mutual fund or any other, exotic product which you hear from other investment advisor, they are the combination of these four products only: real estate, gold, FD and stocks. So stocks we are discussing, and that's why I have not included here. I'm going to include it later. So other investment choices which you have and you already know, all of you know, are real estate, gold and FD. Let's try to understand each of these one by one. Well, real estate is something which is more like a need for a human. You want to build a house, you need to have farmland to produce, right? So, real estate till the time is a housing need, and if you invest your money, understanding that you're investing into a need, obviously that is going to not disappoint you. But the moment you start trading, you start building more houses than required by the population, more houses required by the end user who are capable to buy the houses, if you start doing that, it again become a very very bad practice which has happened in India. And you would have seen the scenario of real estate in last 10 years, from 2011 to 2019, which is going to end now. People have suffered huge losses in real estate, especially people who have invested into houses, who thought that going to be a very good investment and I'll go and buy more than one house. One house is my need where I'm going to stay. But apart from this, I bought another house just because I thought housing is a good return, an asset which is going to give me good return, and that's why I should invest into it. All of them have got disappointed in last 10 years. Before that, there was a bull run for the housing market because it was coming as one of the very good asset class in India, and people, were doubling their money for a year, 2 year, but then they started making more houses, and there where the whole, this balloon also got, burst. So people always talk about stock market crashes. I'm talking about real estate crash which has happened in last 7 8 years, and it is keep on happening. Maybe now it's at a stable price, but again it is all about timing the market. Real estate is something which is your need, and instead of giving any return all your life, it will ask your money for the maintenance. But this is something you need to give because it's a need. You have to have food, you got a salary, you have to have food, you have to have cloth, and then you have to have a housing need. So putting real estate in a pure, investment class is something which I never agree, especially when you are buying house. But let's say if you're going and buying farming land, obviously that farming land is going to give you onion, potatoes, vegetables, grains and so many other things, right? So real estate, when you are going and investing into real estate as a farmland, you see that it is a producing asset. It is going to produce something for you, right? So the asset which you are building or the investment which you are building, it should give you return, right? Actual return as well. Apart from that, the how, hypothetical return. Yes, your house prices will go up, sure, agree, and that is the kind of return you are going to make in real estate as well. Again, agree. But consider the other disadvantages of real estate. You have bought one house, and then that house probably cost you 1 crore. I mean, you cannot buy a house of 5 lakh rupees. If you are buying a house in a metro, you need to invest 1 crore rupee minimum. Now, if you want to go for another house, again, it's going to be a big chunk and another 1 crore. And buying these houses at a loan of 7 8%, it's something which is like, again, a nightmare for you, because this is what the return you are going to get anywhere from any other asset class, right? So, farmland is going to produce something. I want to make this class a class for debate rather. In doubt clearing session, you can debate with me, because these are again my philosophy. So, farmland is going to produce something, and that's why I think that the prices will go up also for the farmland, because every day it is going to provide your basic needs, which is food, right? So agricultural produce is something which is also a return. Increase in the farmland is also a return, and the best part is it will not ask for maintenance. It will not get old. The older the farmland, the better it start becoming. So yes, real estate is an investment only when you are going to buy something which is going to produce something for yourself. So let's say if you are living in Gurgaon or Delhi or Bangalore, and you already have a house, don't buy another house, buy a farmhouse for yourself. That's one suggestion on the real estate side in an equity market class. All right, moving to the other asset class, which is like gold. So you must be wondering why I've written 67 feet. Well, if you go and get all the gold in the world and make in a block of cube, then each side 67 feet cube is something what you will be able to make out of every gold which is present in this world. Well, do you really want to buy that? Or if I give you a choice that out of the similar amount of money, which is approximately 7 trillion, I guess, yes, 7 trillion, you will be able to probably own companies like Apple, Microsoft. I mean, none of them is a $1 trillion company at the moment, probably. I think Apple or Microsoft once touched there, but again came back. So what I'm trying to tell you, you can you can own altogether 30% of the top US companies with a similar amount of gold. What will you opt for? I would certainly opt for all these companies of US rather than opting for gold, at which I'm just going to look and praise that okay, it's a shining metal, looking really good from 10 feet, and it's a big mountain of not big mountain, I would say a bigger statue. Maybe 67 feet is not a very very big statue. It's an average statue in today's world, because we have seen much larger monuments, right? So what do you want to do? You think that block of gold is going to produce anything? It's one of the most useless metal. But we Indians again have a fanciness about this gold as an asset, gold as an investment as well. So another investment apart from real estate is gold, and we are highly exposed here because of our cultural need, which is marriages. And we have a good what you can say understanding also, that we have developed over time, that when to buy gold, or how much to buy. But the idea here is, again, this is not going to be one of those investment which is going to produce something. You completely have to depend on the moment of the gold price. Again, you just have to keep watching the price. If you're going and investing into it, sometime you will be able to make money, sometime you won't be able to make money. And in long run, again, something like this, yes, the price of the gold will be also like this, but the overall return would be somewhere near to what the return you are going to get into fixed deposit, right? So fixed deposit is something which you get from the bank, a promised return. Maybe 2% higher than that will be the total compounded annual growth rate of gold. So, but the philosophy which I'm bringing here in this class about comparing this investment class is where I wanted to ask you or tell you that there are assets which is going to produce something and multiply at a compounded rate, and then there are an asset which hypothetically not going to do anything for you. So, gold and real estate as a house is something which will appreciate for sure at certain rate in a very very long run, but as such hypothetically it is not going to produce something. So the 67 feet of cube kept for 1 year will not become 68 feet cube each side, and a 3 bhk house on a very funnier note will not give a baby and become a 4 bhk house after 3 years, right? It will be a 3 bhk house only. Okay, the prices will go up, it will ask for maintenance from you, but then you have to buy it because it's your need, it's a housing need which needs to be satisfied. Well, moving to the third investment, which is FD. Here I want to ask you only one question. Your bank is paying you interest. From where are they paying the interest? Well, they are paying you interest because they are giving this money to businessmen who invest this money in different businesses and pay them higher interest rate than FD. That's bank business. So if bank take your money and invest further into different businesses, why can't, and make this whole phenomena their own business, why can't we ourselves start going and investing into those businesses? Yes, we can do that. And that's what we are talking about, that the other investment which is left with us is a stock, shares, equity, one or the same word interchangeably. Idea here is to explain you about the benefit of the stock market investment, shares, uh, and that's what I probably I'm doing in this class, that I'm trying to tell you that a stock is a good investment. Again, I mean, so, am I promoting something like should you invest everything into stocks? Well, again, the answer is I have to tell you, I got a moral responsibility and I have to tell you the truth. And the truth is, no, you do not have to invest all your money into stocks just because I'm able to tell you here a stock is a good investment because it multiply your money. Investing into stock is investing into businesses. So a business giving profit of 5 crore this year, going to reinvest that money into the business, and next year going to give you a 6 crore profit and keep on increasing. So which we have covered in the previous classes, that how power of compounding help a company grow multiple times. So yes, I've been able to tell you that stock is probably, company's investment is probably the best investment out of the all asset classes, which is going to produce product services of your need, and that's why it is going to grow faster and give you better return as well. But that doesn't mean that I need to promote equity investment in my investment class. I have to tell you the truth, and the truth is the best investment will be something where you have to invest in yourself. A lot of students are taking this class. For them, I want to tell you that if we are talking about investing into businesses, India is a new country, probably just 25-30 year old. After 1991 only we opened our businesses, and after globalization and liberalization, we opened door for good businesses from the government side and the policy side. So this is the time when we are not looking from perspective of where we need to look at companies and identify to go and invest. Well, this could be a very good situation in US, because there you already have so many organized sector and so many good companies who are doing really well, that investors have a lot of choices to go and pick up. But in this country, you hardly have enough number of companies where you can go and 100% trust on them. You keep on hearing bad news about different businessmen doing malpractices, siphoning out money, running away from this country. So yes, we got a big responsibility here, or this generation and previous generation as well who are active, is like, first we have to start investing into ourselves, investing into our own idea. If you are capable of doing that, putting all your money into your own business is probably buying 100% stock of your company, right? So I got a business plan. Everything which I earn, I put into that, is something where I'm going and investing all my money into my own company. Well, that's the reason I'm talking here, that investing in yourself, your idea, your health, only if you are healthy you'll be able to do well, and your education so that you become more skillful, is much more important than investing anywhere else. That's not philosophical, that's truth. Only when you are skillful, only when you are healthy, only when you believe in something. And where should you believe? You should believe in yourself. I should believe in myself. I'm planning to make a company. I got a vision and mission to educate a lot of people around investing, around stock market, and I'm putting my money, my effort into this area is something where I believe, right? So yes, believing in yourself, investing into your ideas, investing into your education is should be your primary goal. And then you have to think about investing into productive asset. Now altogether you have four productive asset. One is gold, one is real estate, one is uh, FD, and then you have stocks. So yes, we all have certain apprehensions about our future certainty. So you need to put some money in FD as well for your bad times. But even that small FD will not help you much. So rather, you should be planning your finance in terms of insurance also. So instead of keep on worrying about the bad time and keeping money aside for liquid money aside. I know many people. I have so in these classes I'm talking about my personal experience actually also. So in last 5 years from the time I'm into the retail segment in a civil life, I meet a lot of people who keep always 2-3 lakh rupees into their account, thinking, oh, this is something which will be required because you never know when the bad time will come. Well, trust me, 2-3 lakh rupees is not going to help you in bad time. Your term insurance, your health insurance, your personal accident insurance is going to help you in your bad time. Because if you're not insured, covered properly, and if you lose that 3 lakh rupees from your hard earned money, I mean, what about, do you think the bad time don't come again? It will come again. So staying insured is probably the right thing, and not like keeping your money in unproductive asset like cash is the right thing. So you can invest into farmland, you can invest into stocks, which I saw physically giving some return to you also. And we have seen the graph of many companies where you have seen in 25 years they have given even 1000 time returns, right? So am I promoting here farmland and stocks? No, I'm not promoting here this. All I'm trying to tell you that you have to invest into productive asset. You should have your own definition of identifying those productive asset. Well, when I talk about the stocks, you again don't have to go and blindly put your money into the stock or try to time the stock movement, or you have to look at the price of the stocks. No, all you need to learn is value the company. If you start looking at the price of the stocks, you will always get confused whether you have to buy them at this level or you have to keep waiting. So Tata Steel should I buy at 407, Tata Motors should I buy at 162, Sun Pharma should I buy at 560, Maruti should I buy at 7000. If you keep looking on these numbers, you will see both of the numbers which are higher than this also and lower than this also, and then again you will go into behavioral finance loop, and you will be not able to decide. So what you need to actually learn, that once you have understood that yes, certain percentage of my money should go into investment of a stock, you need to learn how to value the company. And it is quite so you it's that time where we are living right now in 2019, that we are so right now I say that okay, India is 25-year-old or 27-year-old. In 1991, globalization happened, liberalization happened, and that helped businesses. In 2 3 years, people just learnt about it. So 94 time frame is something which I take. Then we are just 25-year-old country and young country, right? Largest youngest population stays in India. Well, so here you still will not have many good companies, but then there are enough good companies which can multiply your money, and you have to be right in just 4 or 5 of them. So when you are going to pick 10 companies and only 5 of them are going to work really well for you, you are going to be super rich. Trust me on that. You will be super rich. You will get multiple times return. But then you have to learn to value the company. You do not have to learn to time the share price or time the market, right? And this is what we will learn in fundamental analysis class as well. Well, so idea here is, now again we are left with what is the right time to invest into the money and what is the right time to exit. And my answer is, invest when you have money, right? So if you think you have 1 lakh rupees into your account and you are comfortable investing some money, what should be that money? Something which you need to decide. It should not be all 1 lakh rupee. It should not be even 70 rupees, but it must be anything between 30% to 50% of your saving. If you really have started learning well about the stock market and you have learned enough to value a company and you are not in hurry, then you can certainly think about investing your 30 to 50% of the saving into equity, and you invest when you have money. As simple as that. If you invest at any level in good company with a long term time frame, that is going to, and investment has to be done in stocks the way you invest into real estate or gold also. You invest there for 5 years, 10 years. So if you invest from that perspective, you will going to get really good return in stocks as well. Enough. I know I'm doing a lot of promotion in this class about the stocks, but this is something which is required also. As a country, if we really have to become a superpower, we have to have a lot of businesses, right? Then only we will be a superpower. It's the businesses which have solved a lot of problem, be it a communication problem, clothing problem, food problem, medical, health, every all these problems can be solved in a capitalist economy only when we invest into R&D. Now these companies can only open the R&D cells, right? So the answer for this question, that what is the right time to enter or invest into stock market, so the right time is when you have money in a disciplined manner. Obviously you need to learn portfolio management and risk management as well, which we are going to discuss in later chapters, later sections. But yes, the right time to enter the market is when you have money. And when is the right time to exit? Well, when you need money. It's very simple, right? So you started investing into real estate. You bought house. What you'll do with the house? You pass it on to your kids, right? Your parents would have passed their your ancestral house to you. You will pass on your house, your gold to your kids. So you have to buy these companies stocks also with the same mentality, that I would not sell them unless and until I find them that they are not the same good old company, or there is no better alternative, or there is a better alternative. So enough investing into IT stocks, they are not going to do well. In 20-25 years I have made enough money in them, and then the next era, next industry, next sector is something else where I'm going to invest. So unless and until you are switching your industry, within the stock market or switching the companies within the same industry, or you need money, or you start finding there are issues in those companies, there's no other time when you should exit. So there's no time to enter, no time to exit based on the share prices, based on the bull bear market. They come, they go. What stay there is performance. What stay there is the profitability of the company, the business model of the company. If you understand that, you really know that well, you do not have to worry about when to enter and when to exit. Well, the summary is, don't time the market. No one has done it. No one can do it. There is no definition. There is no clear answer that when is the right time to enter the market, when is to exit from the market. All you need to do is you have to plan your investment in such a way that it keeps giving you good return, and you create it in the form of portfolio, knowing all the risk and always having a long term horizon. Well, with this note, I'm closing this class. I'll see you people in doubt clearing session. Hope you all know how to attend the doubt clearing session. For that, you need to go and watch the very first video. Thank you very much.